Joining us now to discuss Facebook's Libra and more is another player in the space, Ripple CEO Brad Garlinghouse. Brad, good morning.
Good morning, John. Good to be back with you.
Good to have you. So what do you think Facebook and all the Libra consortium really have to do to make this good for the world?
Well, I think at the most macro level, it's been good for the world because it's brought a lot of attention on a set of technologies that really can benefit mainstream banking, mainstream consumer experiences around banking. I think there's a little bit of perhaps arrogance and maybe Silicon Valley arrogance with how Facebook approached this and just kind of somewhat brazenly running into some things without checking some of the boxes. And I agree with the intro there that Secretary Mnuchin, in order for these technologies to be used well and taken advantage of, it has to be done in a regulatory compliant way. We can't expose more risk, and whether it's terrorism financing, whether it's money laundering, these are things that from its core, Ripple really has been focused on making sure we're partnering with the existing system.
Brad, what do you mean by arrogance? I mean, I know Facebook and Libra, they published this white paper, but they haven't actually rolled out any kind of service or any kind of product yet, and they said they did this so they could begin a conversation with regulators. What would have been a better way to go about it?
Well, I think, Morgan, it's a good question. I think the conversation with regulators for Facebook started some time ago, and I think they had heard loud and clear some of these reservations. And I don't think really they took the time to address some of them. A surprise to me, for example, in the 28 groups that are signed on to the Libra white paper, you have 0 banks. I think that's just a stark contrast to where we think this world should come from. There is a huge opportunity to change the way financial systems work that is very beneficial to consumers, businesses, et cetera. But again, it's not competing with the banks. David Marcus came out when he announced Libra and said this spells the end of Western Union. That was a huge call to action to banks around the world that have been watching big tech players that they're fearful are going to come into this space.
So is this an us or China type situation? Because Marcus also seemed to sort of wave that familiar flag that we've seen from Facebook and maybe some others in Silicon Valley recently. Somebody's going to do this, so might as well be one of our own.
Well, look, I think there's no question that there are elements that are relevant to U.S. national policy here. Technologies like Bitcoin are really controlled by Chinese miners. Technologies like Ether are controlled by Chinese miners. For Ripple, we develop on top of an ecosystem called the XRP ledger, which is decentralized and open and really much more of a democracy in terms of how it works as compared with those technologies. I do think that there's a lot of strategic foresight coming from China and that they are aware that these are new technologies upon which a lot of transactions will be enabled. And so they're investing in that. They're enabling it to thrive. I think the U.S. needs to stay ahead of that, much the way we did the internet in the earliest days of the internet back in the mid-90s.
So how do we stay ahead of that? What does smart regulation look like to continue to spur innovation, but also protect what I would imagine are going to be increasing numbers of people and institutions that use these technologies?
Well, I think that's where Secretary Mnuchin was coming from, and that we need regulatory clarity. I mean, even what you saw from Facebook with Libra, the white paper articulates a plan of going to Switzerland to have it regulated out of Switzerland. And although they haven't spoken to the Swiss regulator, I think that was kind of the right thought of, hey, there's regulatory clarity in Switzerland. And I think the U.S. in the late 90s created clarity around how the internet should be regulated. And so I think the same thing can happen around blockchain. There are some areas where there's not certainty, but the Secretary is right that at the core, the fundamental financial regulations around KYC or Know Your Customer or AML, anti-money laundering, there has to be a level playing field both for new entrants as well as legacy entrants. And I think that's really, that I think is a fair playing field for everyone to play within.
So you're in a position to tell, so give us a peek at what you consider to be a worst case scenario. What potentially happens if you move too fast and break too many things with money versus just with data?
Well, I think you see that, and the reason why it's called terrorism financing and money laundering is, when we lower restrictions, we lower regulatory dynamics around financial transactions, you find that money flows to illicit activities. Frankly, even the earliest days of crypto were born of things like Silk Road. The good news is we've come a long way from Silk Road and those illicit use cases, and we're talking about solving real problems for real customers. And there's still lots of speculation in the crypto market, that's clear. But I think as you and I, John, spoke about on CNBC a year ago, the long-term value of any cryptocurrency is going to be derived from the utility it delivers. And I think as time goes by, you're seeing more and more real-world use cases and real utility. And I think it's good to go beyond the hype. Even this Libra white paper, to some degree, as Morgan pointed out, we're a long way from actually knowing what that really looks like and what that really may be, because it's about a year away is their estimation of when it might launch.